What's going on, everyone? Welcome to another episode. In this episode, I'm going to discuss how you can profit from high inflationary periods. This is going to be a very special episode, so I hope you all enjoy. So, what exactly is inflation? Inflation is simply an expansion of the money supply. It's when you'll see an increase in prices and the purchasing value of the dollar decreases over time. So, as an investor, you have to look at ways of how you can use assets that work ahead of inflation so you can be able to properly prepare throughout the year. So, to understand what assets to invest in, I think it would be important for me to discuss where we stand now with inflation and also how the dollar has devalued in the past. So, inflation is also known as being a hidden tax because it's the one thing that you may not notice, but it has a tremendous impact on your income and the purchasing power of the dollar, of your money. So I wanted to discuss that according to the Consumer Price Index, the the July 2021 report stated that inflation is currently at 5.4%, compared to July of 2020. Now the CPI, it essentially measures in prices. It measures prices that are paid by consumers for goods and services. So within the CPI, you have everything from food, shelter, energy, used car vehicles, medical services, etc. And over the last 12 months, inflation has increased by 5.4%, which means that the purchasing power of the dollar has devalued 5.4% in 2021 in comparison to 2020. So what that means is that only 95% is what you can buy with the dollar now in comparison to what you could buy back then. So it definitely is important to understand where we stand with inflation. And also, I explained that inflation is also an expansion of the money supply, and the Fed has been printing money tremendously, and it has skyrocketed within the last 2 decades. It's up from $4.6 trillion in 2000 to 19.5 trillion in 2021. Also, 40% of the US dollars in existence were printed in the last 12 months alone. So the purchasing power of the dollar has significantly devalued, and the Fed is really printing money like their life depends on it. So what can you do as an investor to profit from all of these inflation increases? So I wanted to go ahead and give you some examples of what you should be doing now. So I think that one asset that you certainly want to look at is you want to pay attention to gold. Now, the reason why gold is such a great commodity to invest in because it is a safe haven asset, and it also is great price appreciation. From 2005 to 2020, the price of gold appreciated to over 330%. And I think that when it comes to gold, it is a store of value. And you want to make sure you have a small proportion of that within your portfolio. A lot of people say, no more than 10%, but you want to make sure that you do have that safe haven asset to prepare if anything unexpected happens in the economy and if we do have anything such as a financial crisis. Now, I did also want to discuss that when it comes to gold, it's not looked at as being an income producing asset. It's more also a beneficial of hedging against the debasement of the US currency. So that's why you want to have gold. You want to look at ways of how you can have assets that are not going to only accumulate ahead of inflation, but how can you specifically have assets that are going to give you a hedge against the US dollar? Because we know that the dollar is going to devalue, and people that have their money stored and saved in the bank account, that rely only on fiat currency, things are going to be a lot more expensive for them. Whereas a person that has their money accumulating in assets, your goods and services are going to be a lot cheaper because the purchasing power of your money is going to be much higher. So the next asset that I also think is wise to look at is value stocks. Now, value stocks are very a great asset class to look at right now because value stocks, they tend to be undervalued, and they also will have a high dividend yield, and you're able to get these stocks at a bargain, and they also offer strong cash flows for investors. So value stocks, they also are less affected when it comes to an increase in interest rates. When you think about when inflation has to be corrected or put in place, the Federal Reserve will increase interest rates. Now, value stocks, they're not going to be as affected by that because they're more established, and they are not relying on the expected appreciation. They're not a growth stock. Now, where a growth stock is tending going to be more volatile with interest rates because it does rely on price appreciation and the expected value of the growth of the stock. So that's why, value stocks is great. They also have firm fundamentals, and they don't rely on that expected growth. Now, some examples of value stocks would be like Walmart, Target, Kroger's, Ally Financial, Exxon Mobil, just to name a few. Now, the third asset that I really think that you should be looking at is cryptocurrencies. Cryptocurrencies has been a great emerging asset class. When we look at a lot of the other asset classes over the last 10 years, and when it comes to cryptocurrency, it's only been around for 12 years. But it also gives an investor the ability to hedge against the US dollar, and it also gives you exposure to the blockchain technology. And how I have described it before is that blockchain is simply a data record keeping system that stores information, and it also allows transactions to be facilitated a lot quicker, and all of this information is stored on a digital ledger. Now, when it comes to inflation and crypto, we don't have a large enough case study to really know what is going to happen when we have the next big financial crisis, or if inflation increases tremendously. But what I can say is that when we look at the last 10 years, when we look at what it did in the midst of 2020 with the COVID-19 pandemic, it did very well. And over the last 10 years, Bitcoin is up 230%, and it has surpassed a lot of the asset classes such as the NASDAQ 100 and also the US large cap stocks. So it definitely is one that I would certainly say keep your eyes on. Another asset to look at as far as an energy commodity is crude oil. Crude oil, you can certainly profit from that when inflation is increasing, because inflation tends to be very correlated with the price of oil. When inflation increases, oil will increase. And also, you have to think about the input and the output increases. So what I mean by that, the input with fuel and transportation, you're going to see an increase in gas prices, which that's going to cause the price of oil to go up. And then also the production and the materials that go into producing oil. When you have things such as plastics and also just materials that go into heating a home, those prices are going to go up. So you definitely will tend to see price appreciation when it comes to crude oil. And right now, thus far this year with crude oil, it's up 37.14%. It's around about $65, $66 per barrel. But I certainly would say you will want to keep your eyes on crude oil. And then lastly, of course, real estate. I think that real estate is a great asset to focus on, because the property value of your home is going to, as an investor, is going to increase, because as a landlord, you can increase your rents for your tenants, so you're going to get more rental income. Now, the downside, or the con, I should say, when it comes to real estate is right now we are in a market where a lot of the homes are they're overvalued because there's a lot of demand and there's not much supply. And that could be one reason is because interest rates are as low as 1.9%. And a lot of people are wanting to get into the real estate game because they're understanding the advantages that they can have with having a low interest rate. And then there also has been a lot of government intervention with the extension, with evictions, and also foreclosures. So as an investor, you want to keep your eyes and think about how that can have an impact when it comes to your investment strategy in real estate. And I think that one strategy that you should really think about when it comes to real estate is that you can take out a fixed interest rate loan, and the longer the term, the better. So the goal is you want inflation to increase higher than the interest rate that you're paying on the loan of the home. That way you're profiting from the loan devaluation as a result of inflation, as a result of the inflation rate compared to the interest that you're paying on the loan. So it becomes less that you have to pay back on the home while you're creating equity on your property. So this allows you to short a failing currency by taking out loans in order to buy assets that will increase against the falling currency. So that's definitely some great things to keep in mind. I definitely think you want to look at, value stocks. You want to look at commodities such as gold, crude oil. You want to look at cryptocurrencies, and you want to look at real estate. All of these will definitely keep you ahead of inflation. And keep in mind that the August 2021 inflation report is set for September 14th at 8:30 a.m. Eastern Standard Time. So I would definitely keep your eyes on that. And as always, if you all can continue to like, subscribe, and share this video, that would be greatly appreciated. Leave a comment, provide feedback, share with a family or a friend. And thank you all for tuning in to another episode of Insightful Principles, and take care.